Welcome to Your Daily Five. I'm Bruce Fraser, your host for today, and I have with me Johnny Scan. John, how are you?
Great to be here, Professor. What a fascinating show.
Well, I so appreciate your being involved in this. And we have a very ambitious schedule, so we're going to go pretty darn fast. And we're going to talk about the current structure of the market, distribution or reaccumulation. We're asking this question. Also, if you're intrigued with our discussion today, because we're going to cover these things quickly, is drop us a line, and you can do that via my Twitter or send us an email at Wyckoff Analytics, and we will extend this conversation in a video at Wyckoff Analytics. So we are on the search for the green shoots, John. And so let's talk about what that means. Distribution or reaccumulation, we're at a point, we're going to show you the chart where we've just completed a second sign of weakness in the market, which is a distribution type phenomenon. And so what would we need to see for us to be able to start to consider the idea that we might be in the early stages of reaccumulation, or are we continuing the distribution dance into a final conclusion of distribution, which produces a markdown? So let's work on that idea, John.
Absolutely. What incredible drawing schematics we have here. Professor, what do we have?
Well, John, I was going to ask you, these are Wyckoff schematics. How do you think of them? How do you use these? These are two distribution schematics.
I use them in the simplest possible form. So for example, we see in each case of distribution, price moves up, climaxes in some fashion, then moves across and down. The key is up, across, and down. The exit down is indeed the distributional character. Now, the interesting thing, and the question I think we're looking at today, is we have a possible redistribution, which begins in the same way, up into a structure to a climactic event, and then across, but actually exits above resistance. And I think that's the question we're looking at today. And a lot of people have that on their minds. What's happening in the market?
Beautiful. And that's building a cause. And we always build a cause which produces an effect. And so here's the reaccumulation event that John was talking about right here. So you can see this causal structure after. Now note that a buying or a reaccumulation begins the way distribution does, but it ends with a new uptrend. And so this is the question we're asking: is it possible that we might actually be in a situation where we could be creating a reaccumulation, and we're somewhere in the middle of this process? So let's, here's the way they start: buying climax, automatic reaction, and then a secondary test. Here are the two indexes that we've really talked about a lot over the last few months. We started to really focus on the issues of this market when it got into what we call preliminary supply, and then started to build what now is looking more and more like a distributional type structure. But here is the two schematics we just showed on distribution, John. And so I think there's a family resemblance. What do you think?
Oh, absolutely. Absolutely. We see the UTAD in the case of the SPX, and that is an area above resistance, falls back in, beautiful upthrust and test. And then on the NDX, we have a little flatter aspect across the top. But interestingly, the whole top is potentially its own structure that has failed and put us into potentially even a modest redistribution situation. Very interesting questions. What do you think, Professor?
Yeah, well said, because this whole area up here could be its own complete distribution. this could be redistribution and then lead to another decline. And so here is this area of a possible second sign of weakness that we are looking at potentially. And so we will have to see what happens here. But what I've done is I've actually identified the areas or the points, the key points on the structure that you can see in these two charts. So that's very interesting. And now here you can see this area here is a second LPSY. And we may be looking at a second LPSY off of a lower low, which rallies into prior overhead resistance. So that's the thing, John, that I think we have to ask the question about, and whether or not this is accumulation or redistribution. And so looking now to point and figure, I won't spend any time on these, but I'd just like to point out here that if we zoom in, that you can see that there's a count count here in this upper distribution area, and it goes down to this zone, which was around 330 to 321. And you can see we've hit that first target. Second target slightly lower, and that second target 309 to 291 is reconfirmed by that redistribution count. So I think there's at least the potential to go there before we have a really more important rally. And that's one reason that even if we are looking for a rally here, we have to play good defense, John.
Oh, absolutely. It's such a different perspective to look at the P&F chart, even without the lines and the calculations. Thursday, Friday on a bar chart, boy, you want to get in there both hands and buy, but then you look at the P&F chart and you say, wow, that's a little different perspective there.
Now we can use the triple Qs in contrast to the NDX, and you know, as a surrogate for the NDX. This is 5-minute intraday data, which actually can show you a lot of history. And so you can see a lot of the minute swings. This blue box is the redistribution area we just looked at. That little yellow box, which is just taking a partial count, we fulfilled that count, John, on Thursday. And we have been rallying since. So that's very interesting that we have completed that, and now we're in a rally phase. And here's the S&P with a 60-minute point and figure, which is that little area in the top from the buying climax over to the what's called the UTAD and test. You can see that labeled on both charts. Well, look what we did here, John, is we fulfilled that count on Thursday, and that was the intraday low right there. Kind of fascinating.
These counts are scary, Professor. I've said it before, I'll say it again. I can't believe that this can be done.
Well, this is another.
But you do it all the time.
Yeah, I know. I will pass this chart because we looked at it just a minute ago. But here's the green shoots that we were talking about. Now, green shoots can be very local and very short term. And these are internal structures, and I can't really spend a lot of time explaining what they're about, but I have written about them. We've talked about them in power charting and Wyckoff market discussion. But look here, this is the advanced decline oscillator, advancers minus decliners on the NASDAQ comp. This is the NASDAQ comp up here. And look at how really over the course of a number of trading sessions, as the market has accelerated down, John, we've been making higher lows. That's the kind of evidence you have to look for to suggest that we might be building a more important base for a better rally. And so we had a climax, went below that low, turned up very sharply. And look at this, we have 3 of these higher lows with this little local accumulation area, and that is starting to really turn up this advanced decline. Pretty impressive.
Absolutely. Almost looks a little springy. We could almost see a structure in there with the most recent low being a spring type structure with
Super
a
good point.
confirmation.
Now here's the super big cap NDX index. Now I put, this is on the bottom. This is a chart I look at all the time, so apologies, I just set it up that way. But notice that this is a lower high from this high that was made. Now this is a different kind of breadth. This is stocks above their 50-day moving average. And that's the green line. The red line is the bullish percent on the NASDAQ comp. And so these are two different kinds of calculations for breadth. Both are telling the same story. So fascinating because they're completely calculated in a different way. And I encourage you to go see how this is done. But I want to point out here, this is a big bearish non-confirmation right here. And look at attempt to test on the NASDAQ comp and a much lower high in this index right here. And this is where the really big decline started. So that was a huge tell. But now we have something, and you can go back and look at these relationships over time. Here is a lower low into the Thursday low in that really good bounce. But look here, John, higher low in both of these breadth indicators. And and so there's a little bit of a green shoot there, but that may just indicate that we're just going to get a better rally here. Another important point I want to make about this indicator in this one too is that directionality is important. When it's going down, be cautious. When it's going up, that's a good sign for the rally to start and continue. And then this is the New York, same story. Look at this, upside non-confirmation, higher high here, not confirmed. And then the really big trouble starts after that. But look at this, 4 higher lows, 3 higher lows from this low as the market's going down. So internally, this is the stocks above their 50-day. This is really a super indication that there might be a better, more important rally coming. And you can sort of see that phenomenon at work here. This is not a non-confirmation, a downside non-confirmation, but a higher low here is really a good backdrop for a good rally. So this is a terrific indicator, and I've been using it for years. We're almost out of time. This is more of the same, green shoots. And the last thing we'll look at today, John, is just sentiment, because sentiment is a great backdrop. A lot of bullishness, people buying lots of calls and so on. That is often the environment for a top. A lot of pessimism, extreme fear, that's a sign for a bottom. And look at what happened. This is an intraday reading on the CNN Fear and Greed Index on Thursday, and it hit a level of 20. And look at this, John. This is the 20 level right here. And the last time we were even below 20 was the COVID low. And we're right to that level right now. So very interesting.
You're making the case. You're making the case to me,
well,
Professor.
And this may just be the case for some kind of a attempt to rally in the context of a large distribution. So we have to keep that in mind. And we don't have time to talk about the conditions for how a rally might form for reaccumulation or distribution, but maybe we can do a video on that. With that, John, thanks for being here, and we'll see you all next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.